Well, it's official. Nvidia is expected now to invest over $100 billion directly into OpenAI, and OpenAI's nonprofit will maintain control. This is leading a lot of people to question, wait a minute, is this all just the circular bubble, or is this Nvidia doing what they should be doing? Well, let's take a look at some of the Nvidia numbers here really quickly, just so you can understand how a $100 billion investment into OpenAI looks. Mind you, $100 billion into OpenAI, in order for OpenAI to invest more into data centers and Nvidia chips, is pretty circular, right? Nvidia takes profits and then they can buy back stock, which they do. They regularly buy back stock. Their outstanding stock keeps going down, which is great for existing shareholders. So then they buy back stock, but then they use that money potentially to go make investments that are strategic by either making promises to companies like CoreWeave or making investments into companies like OpenAI, which is then used to go buy more Nvidia chips. Remember, last week we heard that Oracle plans to spend $70 billion over the last 6 months plus 18 months, so that 2-year period. So over 2 years, they plan to spend $70 billion. They expect that 59% of that $70 billion will go to Nvidia chips. Understand for a moment, just those two companies, Oracle spending 59% of $70 billion, that's $41 billion, plus OpenAI, call it $100 billion of circular money. That's $141 billion, okay? Nvidia has revenue of about $46 billion in 3 months. So we've got like almost a year of revenue that we are creating at Nvidia simply through OpenAI 100 bill. This is, spread out over time, obviously. We'll talk details in just a moment. And then the Oracle, 70 times 59%, $41 billion, right? This is almost 1 year of revenue just from those two. It shows you the magnitude of how large this OpenAI deal is. And this is why Nvidia stock is rocketing right now. It's absolutely taking off because people are going, my gosh, Jensen is literally taking profits and then getting Nvidia shareholders exposure to OpenAI. But whether or not that exposure matters, they're basically funding the very purchase of their own continued revenue. So yes, it is circular. At some point, it is very bubbly, but what you find is people are making these investments because of this belief that artificial intelligence will continue to be integrated into our lives in sort of an irreplaceable manner, that it just becomes so core to what we do. And when we look at companies in the United States, they're so much more primed to adopt AI than in other countries around the world. Why? It's simple. We have more money. I mean, understand this for a moment. China buys some AI chips, but they only buy 10% of the world's artificial intelligence chips. It's not because they don't want AI. In my opinion, it's because they don't have rich people and rich companies. Like, how many Chinese can blow $200 a month on a ChatGPT Pro subscription compared to how many Americans can do it and not even notice a difference in their standard of living? The same is true for Chinese companies versus American companies. You have China that just went through a terrible real estate-led recession because of the bubble that the Chinese government propped up, and then they rug pulled their Chinese real estate investors by changing the very debt and leverage rules that they were encouraging their builders to undertake. And this makes for a very hard environment to do business in China. This is selling rich products to rich people. The new iPhone, with the promise of, we'll finally have some more AI, which is the same thing they promised last year. People buy it, hook, line, sinker. I do too. I got it right here. I got the new watch. I got the new phone. Like, I get it. Like, we have cash, and we're like, look, even if it's incremental, we want a little bit more battery. We want a little bit more compute power. We want that artificial intelligence. And I get it. More so now than ever before. Why? Why do I understand that? First of all, it's a big deal that Oracle and OpenAI, just those two things. This doesn't even include Meta. This doesn't even include Microsoft. Mind you, they're spending tens of billions of dollars on artificial intelligence. Meta has a $20 billion deal in talks right now with Oracle. And on top of that, OpenAI wants to spend another $100 billion on backup servers, to sustain sort of their ability to provide uptime. Microsoft just last week committing another $4 billion to another data center in Wisconsin, plus another 3.3 in Mount Pleasant, Wisconsin, coming online later this year. Right? These are huge capital investments. Why does this, how should I phrase it? Why is this all such a big deal for NVIDIA's numbers here? Because remember, NVIDIA every quarter starts at zero. So you need this continued willingness of companies to keep throwing money at NVIDIA. And that's how you get NVIDIA stock continuing to show EPS growth. If you look at NVIDIA's EPS growth at just 20% over the next, call it 4 years on average, they're only trading for a 2-peg right now. Realistically, NVIDIA is probably a $240 stock by year end. I really shouldn't give away these things from our alpha reports. It's part of our Meet Kevin membership. Sometimes that just leaks out from me. But, I've got a big price target for NVIDIA by the end of the year. We've had it for weeks now in the course member live stream. And look, freaking rocket ship right now. So you're not part of the Meet Kevin membership yet. I guess there's a pitch to go check it out. But understand that the American consumer is willing to blow money on just incremental increases in productivity. And I get it. And the reason I was going to say I get it is because what we're doing right now, this isn't supposed to be a pitch for House Hack, but I want you to see the relatability. When we're running models previously on old generation NVIDIA chips for House Hack, we're looking at like 8-hour to 3-day training time frames to get certain MLs, like smaller MLs that we're running, because we have many different segments. We have many different MLs that we run for our real estate AI, which we plan to start beta testing in Q4 with course members, and then we'll probably expand to some kind of public sale for real estate AI in Q1. We have many MLs that go into that. Our compute speed 5x'd when we installed Blackwell chips. And so we're like, oh my gosh, if we're going to spend, X $1,000s a month on labor for research and development on artificial intelligence, why not spend that same amount on labor, but get 5 times the output when the chips are operating faster? So yeah, House Hack has Blackwell chips, and we actually think we might be turning into more of an AI play than even real estate. We're real estate backed. It's obviously all real estate. Like we're still, like our company stock sells, where the fundraise we're doing right now is just assuming a real estate valuation. So assume this is not an AI sales pitch, because I'm not selling you some AI valuation. I'm not selling it. It's like, don't go invest in House Hack, right? Because I think the shares are too cheap. One day we'll raise the valuation, maybe, when we actually start proving our AI in sales to people, but then the valuation could 100x or 1,000x if it works out well. But my point is, for bringing this up as a CEO, not to make, projections or bullishness about House Hack. I'm very bullish about that. You know that. But it's to show you that just like you and I will buy the new watch to get that extra battery life for a little bit more speed, because we could get that email out faster. We could get, multiple tasks running at the same time without the phone black screening and pinwheeling. I got that so much on the iPhone 16, it was driving me nuts. Just like we'll pay for that extra 15% A19 processing on our iPhone, 17. Companies benefit massively from picking up that latest iteration of a chip. So, like, if next year, for example, the Blackwell chips we have right now, we could get another 30% efficiency by buying the next generation chip next year, we'll probably do that because we're getting so much more productivity out of our labor in doing so. And so that's what keeps this flywheel going right now, is the actual results of what's coming out with the AI productivity is good, at least, for our purposes, what we're seeing. We know there are a lot of companies that are just like ChatGPT wrappers out there, and even they are getting great valuations. I mean, look at this. There's Meta spent $14 billion buying a data labeling company that tells you if something's a highway or not. Like, big deal. $14 billion for that kind of data labeling company. We're labeling interiors and exteriors of real estate and different rooms and components of real estate. Yeah. And it's like, wow, the valuation, somebody's labeling highways and they're worth $14 billion. Yeah, I think it was Scale AI. That's crazy. So the valuations are crazy. And there are some things that I feel like, some of these chat GPT wrappers, like I think Nvidia just invested $900 billion poaching the CEO of some chat GPT wrapper, basically. It's $900 million. It's insane, some of these valuations. And I agree that a lot of these companies, just like MIT said, are not profitable companies. And there is a lot of froth, and it's a bubble. It's a cycle. We know that. We know there's going to be overinvestment. But for right now, these circular investments from Nvidia, they keep it going. But there's so much hope in why it makes sense to keep spending on these chips. So like, as much as I want to look at it and go, it's a bubble, it is to some extent. On the other hand, I also, as a recipient of the AI chips, look and go, oh my gosh, but the chips are better. They are good. They make sense. The upgrade cycle makes sense. And the one thing that Nvidia probably doesn't have priced into it right now is the people who are not investing in Nvidia are worried that Nvidia always starts at zero. People are not pricing in an Nvidia upgrade cycle that happens at an annual cadence. This is what Jensen started trying to tell us about 6 months ago, that don't think about this as starting at zero every time. Think about companies saying, no, we want that extra 20% step improvement, just like you get that with that iPhone every year, that extra 20% battery life and efficiency. The same thing with chips. And you can still make use of the old ones. This is what's so valuable here in Nvidia. And Nvidia, mind you, with this OpenAI partnership, is only committing to make the investment of $100 billion in portions as they invest in the deployment of gigawatt systems with OpenAI. So let me rephrase that. The strategic partnership is deploying 10 gigawatts of NVIDIA systems over the next period of time. NVIDIA is only going to invest 10% when the first 10% or the first gigawatt is deployed. So they're basically doing, for every gigawatt, you'll unlock 1% of an investment for us. So we'll basically give you $10 billion to go build a $10 billion gigawatt facility, and then we'll invest $10 billion into your company. Right? And then that is being used to go buy more NVIDIA chips. Jensen is the most brilliant circular kind of salesperson here, because he's doing exactly what you should be doing. You should be going to these companies, doing whatever you can right now to keep the cycle going. And frankly, as much like a Ponzi implies that there's no underlying benefit. And I get that because it's circular. But again, at HouseHack, I see that underlying benefit firsthand, and I did it as a consumer with AI products. Plus, we also have to consider, remember how artificial intelligence products are getting more and more integrated into our daily lives. People forget that NVIDIA is also an FSD play. You know, it's a robotaxi play with their NVIDIA Drive platform. I can't remember if they're on Thor or Orin right now, but CUDA infrastructure for coding, plus NVIDIA infrastructure for basically creating a product that any vehicle company can license. Anyone can license, whether it's NIO, whether it's Mercedes or whatever. Any of these companies can license NVIDIA's AI platform to create FSD and to start catching up to Tesla. You know, they all have a lot of catching up to do. But it's beyond that. We create more and more AI purposes on a daily basis with these products. I know people like, they make fun of the AI gossip, like, oh, I don't want Mark Zuckerberg in my living room or whatever. And I get it. But the more we have these AI potential enabled products, which the AI on this is absolute trash right now. Okay, trust me, it's like totally trash. But it'll get there. And the more we get to where we're looking at, wow, okay, yeah, smart glasses or smart rings or cars or laptops, PCs, whatever, all integrate inherently AI, the more demand there is for these AI chips. I mean, I think it's incredible that I could have that firsthand experience of sitting and playing with my kids and not have to worry about holding a camera to film my kids, right? And I've got the opportunity to film them with these very glasses I'm wearing. So I like, before I go play with my kids, I put the glasses on purpose. And there's no distraction. Like, they don't feel like here, I got a child on me, you know, playing with my watch. That's all she wants to do is play with my watch. While at the same time, you know, there's chaos over here. Like, these are the things that in the future, AI just edits together for us. Like, who actually goes through their, you know, old footage things that they filmed or captured with their iPhones or their glasses or whatever, which the more we film with glasses, the more there is to edit, right? Who goes through all that stuff? Nobody goes through all that stuff. Like, most people aren't video editors who are going to go through all of this, right? But what's crazy is, over time, the editing will all be outsourced to automatic insights provided by artificial intelligence. And a lot of that is just going to be driven on these AI data centers, whether they're Nvidia or OpenAI or whatever. I'll give you an example. When I went to Japan, you've heard I went to Japan. It's old news. When I went to Japan, I had a 360 camera while I went on a ride with the kiddos. And I go on this ride, and AI, you can follow me on Twitter if you haven't seen it yet, at RealMeatKevin. It was super hot, so I'm sorry, I'm like barely wearing clothing here. But the point is, this whole video that you see is AI. Like, the footage is 360-degree footage that I filmed by holding the little stick, right? But AI edited this entire 32-second clip. All of the angles, the color grading, the scenes, all of it. AI. Watch this. I'm going to play this for 32 seconds here. I go point at something, and then it's videoing it. It comes back to Max, Lauren, Jack, and myself. All this. People waving at the character over here. The scene cuts. What to cut out. What to keep. This zoom in right here? Dude, that was all AI. I didn't tell it to do that. Picking up this scene over here on this ride or this ride. This. All AI edited. I did nothing other than film it. And so in the future, we're just going to have which is already here. We're filming it all on our phones or, whatever, our glasses or whatever, which I guess is the perfect spot to put up my Meta, affiliate code. You get $30 off. You get the Meta glasses. And when that all gets AI edited in the future, we're actually creating more demand. That might not be profitable right now for a lot of these companies, but it's so functional for as a consumer or as a user. I couldn't be more excited about this kind of stuff than just flip through. Oh, by the way, shout out to the Cybertruck, by the way. Yesterday, I took this picture with my Meta glasses, by the way. Yesterday, I took the Cybertruck to Lowe's a few times, and I had to get this 12-foot 2x6 in the car back home. And so I ended up using the Cybertruck's rack that I added on top and just bungee corded on it. I think it looks pretty good. The black on black. I think it looks awesome. So I was really excited about the functionality there of the Cybertruck. But anyway, the point is, this is what we're seeing with this AI boom right now. Now let's listen for a moment to what we're seeing the CoreWeave CEO say. He had an interview on CNBC this morning with Sarah Eisen. And, quick note also on Nvidia, because me in the balance sheet.
Kevin is much more interested than most people, by the way, in the balance sheet.
Now, I'm a big fan of the balance sheet. There's nothing to complain about at Nvidia. It is so damn good. They have so much money, so it doesn't even matter that they're investing $100 billion into OpenAI. And the $100 billion into OpenAI is a rounding error, basically, for Nvidia, because their profit margins are so high. They're bringing more than 50% to the bottom line. It's insane. It's incredible. Now, what matters heavily is that when we look at cash flows from Nvidia, we have to ask, what is the money being spent on? If they're just issuing it all out as dividends, goes back to investors, great, that's fantastic. But does it keep the cycle going? Maybe not. On the flip side, if people want to sell some of their stock, they can. But what are we getting out of Nvidia? Nvidia saying, hey, $100 billion into OpenAI, not taking a controlling interest. OpenAI worth $500 billion right now. That's like 1/5 of the company. Nvidia is paying 38 times sales for this. So they're not getting a discount on OpenAI as far as we're aware. And, there are concerns, like SoftBank promises to invest $500 billion over 4 years, yet they're laying off people in their venture fund. So it's sort of like, all right, what's actually going on? I don't know. But IREN at the same time, which has been killing it since we've been mentioning it on the channel, 23,000 AI chips now, and they say they have capacity for 60,000 Blackwell chips. The more IREN stock goes up, guess what? The more money they have available to go buy more Nvidia chips. So circular in nature, without a doubt. Does it make money? Yes. So here's Nvidia, now at 183, but look at IREN, for example. IREN's up 7% today. So a lot of these companies, let's look at CoreWeave. CoreWeave's up 5% right now. Look, breaking above the 125 line, a critical line. This line has been so critical. We've been playing this and setting up alpha report trades on this on almost a daily basis. It feels like maybe probably like twice a week we talk about CoreWeave, and we're like that 125 line. Look, this morning we rejected again. We bounce on it again. Now we're breaking out over it, probably because of this Nvidia deal. But let's listen to the CoreWeave CEO, and let's listen to see what comments he has, and we'll add our own commentary.
Good to have you here, Brian. Welcome. So we were in these talks sort of on the sidelines of the UN General Assembly about how governments can work with CoreWeave.
Those lines, by the way, are all Webull. If you want to get a 2% balance transfer, go to meetkevin.com/Webull. You can go to meetkevin.com/Meta for the $30 on the Meta glasses, meetkevin.com/Life if you want life insurance in as little as 5 minutes. Really good, by the way. Highly recommend you have it, especially like while you're younger. Lock it in.
Paid promotion.
Right. And they're all sponsors.
You were also just fresh off of this trip with President Trump to the UK announcing all of these deals.
All right, get to it. I want to hear the comments. Here we go.
Thank you for having me. And I do think that both of these meetings really highlight the realization that when you're building a planetary scale infrastructure that's really required to allow artificial intelligence to reach its potential, that you are going to have to plug into really all of the resources that are available. And those are private sector resources, and those are public sector resources. The meeting yesterday, the P3 meeting, it was a wonderful opportunity for exchanging of ideas, the opportunity to be with the president and the prime minister in the UK. Once again, just an incredible opportunity to kind of bring together different constituents that have different tooling that allows for the mobilization.
Meta killed the $30 off promo. Dude, that's lame. Are you serious? Hold on. Let me see if there's a new one. Why would they kill it? It was doing so well. So many people were getting it. Hold on. Let me see if I can get you a new one. I'll look right now if I could get a new one while we listen to this. Okay, I'll try to get a new one. Give me 30 seconds to start to figure it out.
Of the order of the magnitude of capital that's required to allow this build out to occur.
What is that? How big are we?
Oh, it's so I think a big one of the narratives out there is that we keep hearing these incredibly large deals being announced by the AI labs, by the hyperscalers, by the neoclouds, and the incredible indication of the scale.
No, there's a limit to how much you can get on a referral, so you have to ask for somebody else. Damn, Meta, you guys are so dumb. I show you guys on a daily basis, and now you screw up the link. Because I don't have a contact at Meta. This was just from the app. And it's like, oh, you've maxed out your referrals. It's kind of like with Tesla. Like my Tesla referral link, it's maxed out. And I'm like, you guys are so dumb.
The demand, but what it does not do is it doesn't really speak to all of the things that need to happen and all of the investment that needs to occur in order to provide an environment where these investments in the data centers and the supercomputers, and I'm talking about,
this so far, he said nothing. This is so damn absurd. Say something already, person.
It's everything from energy exploration, through power generation. Through
okay, we know all this. So somebody here is complaining about the coupon code. The thing, okay, look, really quickly. Yes, the coupon code expires, but the thing is, the price goes up. So that's the whole point. It's like we lock people in at lower prices, and then that way, if you got the Meet Kevin membership for $400 effectively, in 2017, and now it's $1,400 or whatever. In the future, it'll be even more. That's why. So like when you hear, oh, expiration or whatever, the price just goes up.
Transmission all the way through the data centers and ultimately up and through the supercomputers to the models and to the application layer. And so
To get to the point,
it's trillions of dollars, right? And you really are rebuilding one of the fundamental components of what the economy.
I'm surprised this interview so far, not a lot of substance. Like, okay, we've heard before, yeah, $1 trillion, redo everything. I get it. You're like, I'm about to turn this guy off. But although they do have that MSA with Nvidia, you got to give them credit. They have the material service agreement with Nvidia, and that material service agreement, the details of which we expect to get on November 12th, are going to be huge because it's basically Nvidia's, Nvidia's claim that they will buy back excess data center capacity. And that's big. That basically shifts the bag holding from CoreWeave to Nvidia.
Or generation is different than what we saw in the .com. The .com was a bolt-on to the existing infrastructure. This requires really a new layer because you're talking about a step function in power consumption because the computing is powerful. It is a debate that goes on in many circles. Like, is this is the option that this represents on the same order of magnitude, greater or lesser than the advent of the internet? And I believe that over the long term, you don't get to put these things in a pecking order. All you get to say is this will be one of the seminal technology buildouts and one of the seminal technologies of our future.
That's why it was so interesting to listen to the president address Jensen in that room and say, I hope you're right, because the commitment to get it made is much different than it was in the 90s.
Yeah. He so far has said nothing. This is a waste of time. Somebody says, yeah, getting Kevin's course, one of the best decisions I could have made a few years back. Very proud to be in the group. Oh, thank you for that. Yeah, it's interesting. What's it called? There's somebody else who donated $20 earlier, just going like, oh, basically, been a course member since 2021. Great decision. That was really nice.
I think there's another narrative out there is like, are we in a bubble? And that's come up again and again. And I'm sure if I kind of sat here long enough, you guys would ask.
And
given the sums we're talking about, it's not an unrealistic question to ask, because is that capital going to actually produce a significant return?
So one of the things that's incredibly important to understand here is that the overwhelming majority of the compute that's being built right now is being built to serve inference. Inference represents the monetization of artificial intelligence.
It is. I don't know. Okay. There's training and there's inference. We get it. Inference, he says, represents the monetization of AI. Do I agree with that? I guess so. Because, for example, with HouseHack, we're doing all this training. We can't monetize training. We can only monetize inference. When somebody, what we want you to be able to open our software and me tell you if a property you're looking at is a good deal or not. And I think that lets us charge money. That creates value for people, right? And when you create value for people, you could charge money. So I guess he's right. Inference is the monetization component. Okay, all right.
Because the hyperscalers that are serving clients are being paid to build this infrastructure to serve their current demand and their projection of demand. And so, just because a lot of money flows into a particular portion of the economy doesn't imply that it's a bubble. What it is implying is that there is tremendous broad-based demand across the technology space as the society.
I mean, yes, I agree that right now there is broad-based demand, and it just keeps getting fueled. So there's no sign of it popping, so to speak. This is true.
As the enterprise businesses begin to integrate that into their workflows. And it's just, I think that everybody jumps to the concept of, is this a bubble? Because they just see these vast sums and they're like, oh, it must be a bubble. And I just think you've got to go back to, why is the money flowing there? And is it being supported by commercial activity?
Right. Well, I don't know that we all do that. And in part, I mean, the companies that are deploying this capital.
Okay. All right. I mean, like, not a lot of substance in that CNBC interview. Have to say, I think CNBC did a bad job on that. But that's okay. It's CNBC, so take it for what it's worth. But I think his point of view is right on, that inference is the monetization cycle. Now, the biggest argument that people have, especially like MIT, is that so much money is being invested in AI, but so little is coming out of it. Does it just take more time? Maybe. So we'll see. Can AI be productive enough to actually be monetizable? More so than the investments that are being made, to where you're actually getting a return on your investment rather than even just some portion of a return of your investment. We'll see. But broadly, I think this is useful because you have to remember that Nvidia right now is only trading for, barely a 2-peg. Barely a 2-peg on this stock. And to me, a company with these margins and the size of the pricing power they have, here's Weeble again. Balance transfer 2%. Meet Kevin Darkover, Weeble. They're not fully valued on just a basic peg ratio basis. So we'll see. That's my take on what's going on with Nvidia.
Knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.